Good mornings. As Chris said, I'm Craig Farr. I joined Apollo 6 months ago, and I'm thrilled to be part of the platform. I was chatting with Mark yesterday, and he walked up to me and said, "Hey, you've been here 6 months, and I know we put a big budget on you, doubling revenues, but this has got to be the easiest job you've ever taken." So thanks, Mark. Anyway, so I am super excited, and I spent almost 3 decades in the financial services industry. Started my career at Citigroup, where my last role there was running their U.S. equity capital markets group. Actually worked on some of the pioneered permanent capital vehicles with Jim and Scott and Mark and others, also AAA. So seeing the innovation through Apollo and Stephanie too. Then I went to KKR and spent 9 years building their capital markets group and eventually ran their credit franchise as well. And most recently, I was at Carlyle as a senior advisor providing advice to their credit capital markets group. So I've seen a lot of different businesses. So I want to walk you through why I'm really excited about ACS, but before we do that, what you've heard already today is we're sourcing a lot of unique deal flow. That's the raw material. That's what really attracted me to the platform. And as Chris said, we're augmenting that with additional origination. This has created the strategic imperative to create the centralized utility we're calling Capital Solutions to really syndicate to a broader market and also bring these solutions to the market in a cohesive way to our sponsors and companies as well. So what is Apollo Capital Solutions? We define it in 3 pillars. The first, origination. You've heard it all day. What Apollo Capital Solutions is going to do is we're going to take all that origination that's happening across the whole firm, put it together in an integrated way, and bring it to companies and sponsors so they can easily see what capital we can provide. And we're going to walk you through on the next slide a very powerful case study on that front. The second, capital markets. We need to be competitive. We need to be fast. Jim talked about Hertz as a great example where we had a credit view and we had speed to execution, and that's why we were able to win that transaction. And then syndication. This is probably where I'll spend most of my time today. This is the easiest way to articulate the power of coordinating in an integrated way and broadening this out to a broader marketplace. This will give us a bigger bat to swing. We'll win more business, develop new client relationships, and obviously earn incremental economics for shareholders. So I talked about the power of bringing integrated solutions. Here's a great case study. Many people would think of Blackstone as a competitor, and there certainly are cases where we do compete, whether it's in private equity or certain situations. But in many cases, we are really now a capital partner. And by bringing all this to bear with Blackstone, it's really paid dividends for us. In the last several months, we provided fund finance for their credit vehicle. We provided direct lending to one of their portfolio companies in Europe. Real estate project finance. We provided a bespoke securitized financing solution to one of their TAC Ops businesses. And we also provided a large loan order in their Medline financing. On the flip side, Blackstone's also been very active in our private equity portfolio. It's actually been one of the largest direct lenders of our private equity companies. So I think you see there's an ecosystem developing of illiquid capital where both franchises can thrive and grow. So we talked a lot about syndication as the key here. As Jim said, opening up this broad market. Right now, let's say we think we address maybe a $7 trillion market with some of our syndication products and co-investments. If we broaden that out to mutual funds, to hedge funds, family offices, we believe that addressable market moves to $60 trillion. And this is a critical tool for us as we'll walk you through. What this does for shareholders and for clients is it's a multiplier effect. In the old world, maybe John Zito would invest $400 million in his fund. Stephanie would syndicate $100 million to our LPs. Still a great transaction, still very profitable. New world, we're going to have confidence that we can also distribute to this broader market with these relationships with mutual funds and hedge funds. That should double the unit economics in fee-related earnings for that single transaction. 500 to the fund, 500 to LPs and third parties. And this also, as Mark mentioned, helps us maintain diversification in our funds as well. I talked about Mark telling me this is a layup, but he kind of is right. This business has all the tools to thrive inside of Apollo. We have the differentiated capital base you've heard a lot about. That's being able to walk into Blackstone and tell them the 5 or 6 things we can do is pretty powerful. We have partnerships with the banks. We're not trying to disintermediate. We're trying to partner with them. We're in the market this week with Polyant, where we underwrote the original 1.3 billion euro underwriting, but then brought in JP Morgan, and we're partnering together in the market and the distribution. Lots of ways to still work really well with the banks. Relationships, Stephanie's built an amazing business of LPs and relationships, and she's gonna talk to that. And then you've heard about origination all day. So we have so much raw material to work with. All my job is to integrate all this together and bring it to the market in a seamless way. So as any business, we have to make sure it helps all stakeholders. We've walked through how sponsors and corporates and banks benefit from one-stop shop, structuring expertise, coordinated coverage. Our LPs, you're hearing, they want both funds and co-investments. We can do both, and we do both well. And then shareholders, of course, this should translate into greater fee-related earnings. As Mark said, we're anticipating doubling this business over the next 5 years, and a lot of this should fall right to the bottom line, because really all we're doing is amplifying the work that's occurring across the whole firm. We've talked about the importance of fintech. And if you heard from Mark, innovation is a key focus. We believe today, syndication is very labor intensive. It's salesperson to investor. Over time, that's going to evolve. It's going to end up being much more digital. We're already seeing that in funds and yield products, and we think direct investments will be the next frontier. So in closing, we're investing in ACS to drive a centralized integrated platform. All these dedicated syndication and origination efforts connect the dots between all the investment professionals and the addressable capital that's out there. And lastly, this should and will accelerate our fee-related earnings growth. And now I'll hand off to Scott Kleiman, our co-president, who will speak to our equity and hybrid franchises.